Tech giants Facebook, Apple, Amazon, and others are still under pressure from European regulators, from Congress, and even the president himself. Meanwhile, a few consumer-facing tech IPOs off to a rough start as they make their public market debuts. We take a look at Snap, Blue Apron, and Roku. Venky Ganesan is a managing director with Menlo Ventures. Josh Spencer is a portfolio manager with T. Rowe Price's Global Technology Fund. Venky, when you look at what European regulators are doing, you think this is just an attempt to take Silicon Valley to the woodshed because they're not domestic? Why are you convinced it's that and not what we've seen over the past couple of decades, just a tighter regulatory regime?
Look, I think it's a fair question. We can talk about tax and what the right taxation is, but what the European Union is doing is not about fair taxation. It's really about anti-free trade. They are trying to control American companies and penalize them for their success.
Josh, looking at some of these recent IPOs, how they've performed, we just heard from Evan Spiegel down at the Vanity Fair Summit saying he's not communicating well with Wall Street. Is this just a communication problem, or is there something deeper?
Well, it's not one answer for every company. What I think we're most interested in at this point in the economic cycle and in the tech cycle are companies that sort of have proven durability and a real financial model that scales. I think some of the companies that have IPO'd recently have lacked that tangible evidence of profitability, and not just because of choices that they've made, but maybe because the business model doesn't support it. And I think it's a time with valuations where they are to be very conscious and very thoughtful about the type of companies that you're investing behind.
Josh, if we take that line of reasoning a little bit further, does it mean that it's more likely than not when we do see a tech company that's poised to go public, that maybe doesn't have to raise capital, that there should be an immediate skepticism? In other words, they feel they have to go public because they can't thrive as a private company anymore?
I would say there are always very good companies in the private market that can come public at any time, and sometimes companies make that choice for the correct reasons, and sometimes they're making investments in their businesses that are supported by the long-term outlook. That said, over the past couple of years, we've seen a lot of IPOs where the business model just didn't support financial success, either in the private market or in the public market. And it's not about choices, it's just about a business model that wasn't there.
Venky, I want to go back to what you were saying about the EU and taxes and how they're attacking American companies. It gets to the heart of the whole issue with tax reform and corporate tax reform, doesn't it? When you have all this money sitting offshore, bureaucrats all over the world want to try to get a piece of it, don't they? I mean, if we had a much better corporate tax rate, they wouldn't be incentivized to do all the things that they do in Europe and to give all those bureaucrats the excuse to do what they do.
I totally agree with you. We need to create tax reform so that we can bring back the hundreds of billions of dollars that's trapped overseas. And the longer it's trapped overseas, the easier it becomes a honeypot for European regulators to go after. But we also need to do it in a way that we can make sure that tax reform helps companies in America. We want to create jobs in America. We want to make sure that the venture-backed sectors and the small businesses in America have the right tax structure to have a pro-growth strategy. It's only through growth that we can fix our economic woes.
Why do you think the Europeans are so anti the American companies? You make it sound like it's more than tax policy.
Yeah, I think they feel like American companies have grown very powerful. They also feel like the U.S. government has gone after the European banks like Deutsche Bank and Soc General. So they look at this as a way of European protectionism. And there is definitely a feeling in Europe that some of the internet companies like Facebook, Google, Amazon have become too powerful and they need to control them.
Josh, when you look at some of the companies, again, that are newly public, on the one hand, you've got Snap and Blue Apron. On the other hand, Roku has done pretty well, at least in these initial couple days. Do you take more lesson from Roku and perhaps how it priced, how it handled the IPO, or some of the others that haven't done as well?
Well, it's a good question. I would say in that initial trading in the first few days, it's very difficult to draw a longer-term conclusion around it. For example, if you think back around the way Facebook traded post its IPO and then the long run of success that it's had subsequently, I would be hesitant to draw too much into the first couple of days of trading because of liquidity and because of excitement that can happen. So I guess I look more about the underlying financial models. And in those three companies, so far it hasn't been there. I just don't think that those companies show the type of durability that you'd like to see in your investments.
All right, we will leave it there. Venky Ganesan from Menlo Ventures and Josh Spencer from T. Rowe Price.